Hi, family. This is Willie Green, aka Dr. Financial Literacy. I am a political scientist. I am not a CPA, lawyer, attorney, a financial planner. All the information that I'm presenting today is just based on my personal experience, information, knowledge, spirituality, and education. And I just wanted to share this journey with you in terms of refinancing my properties to get a lower interest rate and to pay them off quickly through either using a HELOAN, a HELOC, or all-in-one mortgage. I'm trying to use the all-in-one mortgage because the all-in-one mortgage is a product that marries your savings account, your checking account, and your mortgage all into one so that you can dump your paychecks, you can dump savings, you can dump your bills, you can dump your credit report bills in it and lower your overall principal reduction. So let's go ahead and get started. Yesterday, went over some numbers in terms of let's see, sorry about that. Yesterday went over the numbers of my mortgages when I first received them, and this was that information yesterday. Again, as a recap, I purchased three properties over about a 4-year period in 2005, 2008, and 2009. The total interest on average for the three properties together, 6.21. The principal and interest that I'm paying without the taxes and insurance, about 1245. House insurance and taxes a month, about 900. Total for the three homes, about 2145. The total loan in the beginning, I'm just looking at combining them, 206,650. The interest that's paid over the four properties are 243,265. The total payments will come out to about $449,915. So now let's go over to where I'm actually at in terms of the mortgages. Okay, this is the first property that I purchased with the Department of Housing and Urban Development. They paid I think 3% of the cost, and I had to put down maybe 2%. The interest rate, as we saw on the first, was 5.75, but I was able to refinance at a lower rate during, I think, pre-COVID or during COVID with my past lender. Currently, the principal and interest, $419, monthly escrow, 336. The original purchase price, excluding commissions, sales, taxes, was 101,850. Okay, I'm at year 19, so I paid it down to about 80,000. The total interest to be paid over 30 years will be 112, and the total monthly payments will be about 213. So that'll be an interest and what I initially paid for it, which is about 213,000. The second property is a sunset property. It's a townhome. Interest rate 6%. Principal 347. That's just the principal and interest by itself. The escrow, taxes and insurance, 318. I originally paid 57,900, and I have a remaining balance 16 years later of 35,837. Now that's a small amount to be paying over a 30-year period, but you have to remember the banks or the lenders front load all of their interest. So for the first at least 20 years, I mean, at least 15 years, I've been paying on just the interest. I'm now just starting to turn the corner and paying more principal than interest for all of the properties. So I look at it as, okay, what if you purchase a $60,000 car? Would you take 60 years to pay out that car? No. The auto loans do not front end loan as much as a home. The total interest to be paid, 67,000. After 360 payments, 124.97, and hopefully to be done before 2038. The last property is also a townhome, 30-year fixed, 6.88 interest. So again, when they have been talking about high interest at 6%, 7%, I've been carrying for more than a decade, nearly 7%. Am I proud of it? It's the cost of doing business. It's a choice that I made to do. But I've been carrying nearly 6 to 7% for the last almost 2 decades. And if I had another opportunity to do it, I would do it again. Is another investment. I can write it off, so it's not really costing me much in general. And I have so many other deductions in my business that are tied to it. It's a net win if you know how to operate it right and start a business from one rental property. I initially started from a room for rent and just growing from that with my roommate through what's called house hacking. On this last property, I owe 28,417, $64,000 will be paid as interest, excuse me. A total of 110 and a payoff 2038. Now, when I look at all three properties together, and again, one of the things that I'm trying to do as this journey that I'm working on, I want to consolidate them. I want to pay them off early. So when I first started looking at refinancing the properties, I came across the HELOAN. And the HELOAN would have been a fixed rate at 5.75. They would have provided me, I think, 170,000, 30,000 over in general, and that would have been able to pay them all off, but I would have been locked in a fix and then paying fixed rates and paying interest on them in a way that I'm trying to do something differently. A HELOC is another strategy that I'm looking at. If I get a lower amount, maybe 60, 70, 80 some $1,000, I could take chunks of the HELOC and place it on the different properties or possibly pay off one or two and then shift the money over to the others to pay them down faster. The last option is the all-in-one. And you can check out my previous video where I defined all-in-one and gave an example. An all-in-one is like you have a mortgage, but at the same time, you can take your checking account, your savings account, and they merge the three. And because your saving money is in there, your check is going in there, you have different deposits that's going in there, is lowering the principal every day when you put in more money or you knock it down. So let's say, for example, my mortgage is $100,000. I take my paycheck that I get every 2 weeks, put it in, and say it's about $4,000. Then my principal will come down to 4,000 for that time, and then say, okay, I have my bills money, and let's say I pay like $1,000 in bills. So now I put that in there. That brings it down to another $1,000. Now I have to go back and pay my bills, so it's gonna come out. But because I was able to lower the principal and they charge an average daily rate on the principal, then I'm paying less over time in general. So now let's look at all three properties. And looking at all three properties, I just thought about, okay, one big property, 30 years, an average interest rate of 6.21, the principal and interest only for all three properties, no taxes, no insurance, 1,070. Now, when I put in the taxes and insurance, is about $1,023. And one of the things about the all-in-one, I'm gonna be able to put these payments in here monthly, then that'll help bring down the principal. And then once the properties are paid for, and I'm not sending the $1,000 escrow over to the mortgage lenders, I can keep that in and it's growing every year until I have to pay at the end of the year around November for my escrow. But prior to that, I'll be able to have $11,000 knocked off the mortgage, but I still have to pay my principals and other things out of it. So it's really helping to knock it down. The total loan for them three properties, 2006, 650. The total interest over the 30 years would be 243,000. all 360 payments will be 449,000, and hopefully have them all paid off by 2038. Currently, my balance on all of the mortgages are $143,000. So one of the things that I'm looking to do is hopefully get finance to consolidate or pay them all off at once, and then use that HELOC in which I can dump my paychecks in. Now, one of the cautions that people have talked about with the HELOCs previously in 2008, they did shut accounts down. Some of the major banks and maybe the smaller banks, but for the all-in-one, I think no one really shut those down, and your money was kind of locked in. Through the Dodd-Frank Act, they changed it. Now, I think they need to give you 60 days before they can shut the account. It's not that they can't shut the account and reduce your HELOC. So if I get a $145,000 HELOC, they can shut it down, give me 60 days, and then it's just locked. And I still have to pay the HELOC. So again, thank you very much. This is Dr. Financial Literacy. I just wanted to show you day 9 where I was at in this process, and give you all an update on my 3 properties the 3 properties I have post. Looking to get this loan, this HELOC or all-in-one mortgage, so that it can be paid down and save thousands. If you want to learn more about the all-in-one mortgage, I really encourage you to really just go out and do some searching on the internet and do some reading. If you're carrying a mortgage in general, this is really a game changer. It can save tens of thousands of dollars. So if you like the video, please subscribe, share with your friends, and please leave me any comments or recommendations as I go through this process, or if you've known anyone that has a HELOC and they've gone through the process. Thank you very much for your time. Appreciate you stopping by. And this is day 9, and I'm trying to keep up the faith so that we can get it done. Thank you very much for sharing with me and coming